Good afternoon, financial professionals. My name is Brendon DeRouin. I am Chief Distribution Officer and Managing Partner here at E4 Insurance Services. Welcome you to the Brew, building relationships every week. Thank you for tuning in. For those of you joining the Brew for the first time, welcome. We like to start the Brewcast by celebrating today's national and monthly days. So not a lot of great national days, as you know, it's kind of the first of the month, and May Day takes the cake there. But on the month side, it is Better Sleep Month. So although the sun is coming up earlier, that means you should be going to bed earlier as well, so it doesn't wake you. But Better Sleep Month, followed by National Egg Month. So once you get a good night's sleep, make yourself a delicious omelet. As I mentioned before, it is May Day. That is the day, not the distress call. Unless you've got a client that is coming in and needs DI, and then that distress call, well, reach out to Brady for Disability Awareness Month. So, as I alluded to, today's Brew is kicking off our May-focused planning series with Brady, our Senior VP of Disability Income. And we'll be discussing why E4 is here for your DI needs, our successes, and what's on the horizon. We encourage you to use the chat box or raise a hand to ask questions. Also, all attendees are in a drawing for a CE voucher and a Starbucks gift card. We'll announce the winner at the end. Thank you for tuning in. Brady, thank you for joining E4 and being here today on the Brew.
Morning.
So, yeah. Let's have a conversation. You've been here almost a year. Why were you excited to come to E4?
Well, again, Brendon, yeah, right. It's been a little over a year since we started the conversation, and coming June, we'll hit the 1-year mark. I guess, the big part was, opportunity and ability to be truly independent in providing, that consistent customer experience. I mean, again, it's what I've done my career, whether it was as an underwriter or in doing executive benefit stuff or as a personal producer or, back at this Ohio National on the DI distribution side there. It always involved customer experience, but aside from being an independent producer, I was always repping one company. So the ability to plug right into an organization that's been growing, and I'd like to flip that question. It's kind of being an IMO that was known for annuities and life insurance. It's always the question, why'd you guys decide to jump into the DI side of it? I mean, there's a lot of DI outlets out there, but what was your reason?
Couple fold, actually. One, historically, we understood the importance of DI, but we are I'm a believer, jack of all trades, master at none. And we didn't have, the staffing, the support, or the expertise to be, skillful at DI. So that's where we, partnered with some of the firms that we did, and they did a great job, and they, brought value to us. But, we saw a difference in the level of service that we could provide when we were providing the solution and the product and handling everything internally versus when we had to, work through a partner. And no disrespect to our partners, but just the more cooks you get in the kitchen, the harder it is to make a meal. And we looked at that and said, maybe we should bring this in-house. And that sort of coincided with learning about you, Brady, and your expertise and background, which I'll finish talking and then ask you sort of a little more about your background. But and I'd say lastly, as we have expanded into working with some of our institutional accounts, executive benefit firms, we see the opportunity on the multi-life and executive carve out that, again, we saw an opportunity when we wanted to go for it. So, but tying that into your background, Brady, can you share a little bit about that?
Yeah, I mean, it's been 30 years this year now in the insurance business, and when everybody graduates from college, they say, I'm going to go be an underwriter. Actually, nobody says that. Kind of like, oh, actuaries probably say they're going to go be an actuary, but nobody says they're going to be an underwriter. They had the ability and went in and learned and kind of moved up my way, underwriting life, health, and disability, and then moving strictly to disability, and then kind of starting the guarantee issue side, being the head underwriter at the standard for the guarantee issue side, and then moved into the product side and out into the sales because I kind of like that piece of it, putting together the deals, and then went out on my own for a bit, and then had the opportunity to go back, and Ohio National jumped into the business, about 11 years ago. I was on the forefront of getting them up and going, and then they made some changes, and kind of coincided with great life changes myself, and was able to come here and be independent and do the things that I've always liked to do. I would
So,
go
Brady,
ahead.
you alluded to, obviously, strong underwriting background, but you also like the sales side. And we don't normally find somebody who can, you know, underwrite, know all the technical stuff, and actually likes to sell. I know you're an oddity in lots of ways, but specifically, uh, talk about that. I mean, and for those that are unaware, Brady can help jump in, help deliver the solutions. Either explain it to your advisor, and some cases even get on with the clients. But um, why do you like selling and have that strong background? Why are you so unique?
Again, that home office background is key. I always said it's not um, what you say to an underwriter; it's how you say it to them. Um, I equated underwriters to kindergartners, where if you drew a picture in your kindergarten, you put it on your fridge, your friends might come over and think your child's kind of disturbed, because it looks like the dog's burning, and the the house is being flooded, and you know, uh, but kid, no, that's us swimming at the pool with the tiki torches, and you're looking at the picture going, I didn't see that at all, versus the kind of the process, and I like our quote intake sheet, and the reason I think we've placed about 90% of what's been submitted is because we understand what's going in up front. So I say, if you give the underwriter, paint by numbers, and there's 100 numbers, if you get all 100, it's going to look like your client. If you get 98, it's still going to look like your client. So I think it's setting that expectation up front and putting the right information in front of the underwriting team and working with them to do that again. And that's the part I think where we step forward, both on all our product lines, is the ability to be that intermediary with the home office, and not only knowing what to say but how to say it to
So we help our advisors paint by numbers. Uh,
them. Pretty
not heard
much.
it boiled down that way, but I don't disagree. Some of them can create masterpieces on their own, and others, yes, it is that burning dog with
Well,
a house.
and Brennan, disability is one of those products that we joked earlier. I said I will tell you, absolutely no client is going to walk into your office unless they're a doctor, a dentist, and they're in residency, and their mom or dad or colleague told them to go get it. Most people aren't going to walk into your office asking for disability insurance, because again, they don't perceive the need there. So again, that's the part, and most agents don't talk about it because again, some have had an experience with it and it's been negative. They submitted a case that either went to the wrong carrier and or didn't have the right expectations set up front with the client. And when things get changed, clients aren't happy. So what we try to do is put that, hey, if you have a back problem, tell them they're going to have a back exclusion. Okay, if they're a truck driver, don't quote them the same as an attorney. You're not going to get that policy. So it's really putting the right pieces out there, and understanding what it is. And then once you get an underwriting offer back, we assist you, in understanding it so you can explain it to your client. And or if you said, myself and other members of our team, we can get on the phone with the client and talk to them. I mean, it's why we're licensed and appointed, carry E&O coverage, can really truly make that independent recommendation. But the most important thing is somebody understands what they have. Again, that's where I find where some of our industry has gone wrong, is they've really just put quotes out there. And if I'm a producer who sells one or two DI cases a year, you're in the top 5% of BI producers in our country. People have accident health licenses. That's if you sell one or two a year. So most people don't understand all the changes that go on within the carriers, so that's kind of, us putting the expectation out there and being able to explain it and how it works really gives you that vote of confidence as an advisor, that they understand their plan. I think that's the biggest piece. The part is, you know, everyone needs a plan if they get sick or can't work. Again, and then take out the word disability, because I will tell you, if you talk to 100 people, 99 of them will think they'll never be disabled, maybe even all 100. But if you tell them, do you think you'll ever get sick or hurt? Well, yeah, I might. Again, that's kind of thinking about it a little bit differently. And then where's the plan? All these bells and whistles are in there. They mean nothing to your client if you can't afford it or don't even understand the need. So I think that's the biggest thing is, if you have a need and you have a budget, we can design a plan. Again, whether that's a 2-year plan, a 5-year plan, age 65, who knows? I mean, until we see what they do, what their health is, what their income is, and what their budget is, that's when we really put the pen to the paper and figure out what the client and how to issue the policy.
So, Brady, a couple takeaways from what you said. Nobody comes in and wants DI, and the old adage, insurance is sold, not bought, rings true. But, if an advisor is going to, put it out there, they need to have, the knowledge and expertise, or at least a team behind them. And that's where, E4 comes in. I guess a twist on that, or something that we've seen a lot of, is, a lot of people, they don't think they need DI because they have it at work. And, again, I think it's understanding what they have. Can you talk about some of the opportunities there and the misconceptions of what they think they have at work versus what they might have?
Yeah, again, it comes with all financial pieces. Really, it's education. And the point is, the misnomer that you're covered through work. Well, about 35% of all employers have long-term disability. So that's, so you take a look at that population, only 35% provide long-term disability. Again, people confuse Social Security, disability, they confuse workers' compensation, short-term disability, but really the long-term disability, which is typically 90 to 180 days and out, to retirement age. That's the long-term disability. So that's the first one, is, do they even have what they think they have? And then once you dive a little further into it, you ask them the questions, okay, what percent of your income does it cover? Most people, some know, most don't. You say, what's the maximum benefit, which means, that the carrier would offer you. So if it's $5,000 a month and you have a 60% plan, it covers $100,000 of earnings. Okay, well, what if you make 150,000? Then the other part is, well, what's the definition of covered earnings? Now you're asking multiple questions and you're getting, deer in a headlight with the client. And the easiest thing to say is, let's get a copy of your summary plan document from your employer. It's a PDF. You don't have to look at it. We'll look at it and we'll determine. About 5 minutes, I can look at the 60-page document and tell you exactly what it covers and what it doesn't. And, to go to the covered earnings side of it, most group plans don't cover incentive compensation, base or bonuses, commissions. So, a lot of your executives and sales individuals, they have that issue. So that's a big problem. Again, when you think you have 60%, but then you don't have 60%, and that's really putting it on the paper and, saying, hey, here's how your plan works. And then the question is, well, if it's, I make $200,000 a year and only 100,000 is covered, and oh wait, my employer pays for it, so it's taxable. So if you make 200,000 and we look at your plan through work, we determine you only have 3,700 after taxes, where's the shortfall coming from?
And yeah, and likely, if you are, sick or hurt, some of those activities around the house that you were doing before, you either need to outsource, or some other family member is going to pick up the slack, and now you even have, less income coming in to cover it.
Correct. You go with the basic. I used to have the 5 basic things. Everyone's got to have a place to live. They got to eat. They have to pay their utilities. They have to have transportation, and they have to have insurance. Outside of those 5 things, everything else is lifestyle. And I'll tell you, 100% of your clients like their lifestyle too. Nobody wants to go backwards. Your family doesn't want to go backwards. So, then it's the question of, how much lifestyle do you want to account for? And I think that's really from a premium perspective, that's where the lifestyle portion comes in. How much can you account for? But you'll better at least be able to cover your basic expenses.
I couldn't put it better myself, Brady. As far as some of the solutions on the disability side, could you talk about, what we can bring to the table and what solutions we have?
Yeah. So of course we have the fully underwritten opportunities. That's the, fully completed application, tax returns, potentially have to do labs and exam. So that's just the fully underwritten side of it. We do have business coverage as well. So business overhead, we sold a little bit of that this year, and that's the tax deductible product that if you're sick or hurt, most of your fixed expenses can be reimbursed. Keeps the light on at your business. Again, that small business owner, you have one checkbook for two big expenses. So, again, whether it's your right pocket or your left pocket, it's still your money at the end of the day as a business owner. And those business expenses are due just as well as your personal expenses. We've had some success this year and been quoting quite a bit of disability buyout. I know as part of our series that we've been talking about the business owner and what can happen to them. I think it was in February that we discussed it, but disability buyout, it's key. I mean, hey, Brendon, a serious question. I mean, if something happened between you, Dan, and Steve, and you were the one disabled, do you want Dan and Steve determining if you're disabled or not?
No, they might already think I'm disabled.
Again, so it's a true part. I mean, so do you want your partners to be the ones determining if you're disabled or not? And then where's the money going to come from? So again, life insurance is pretty cut and dry. I mean, you're pretty much dead or not dead, right?
Generally.
So on the disability side, it's, how does the contract work? And that's one of the things we've done as well, looked at their disability buy-sell agreements to be able to make suggestions to the language, because an attorney will write anything that's legally binding. But does that really meet the intention of the business owners? So again, and using that product as a way to do it. We have key person. So again, if that business loses that key salesperson who has all the accounts and all the relationships, what's it going to take to get somebody else? Again, so there's potential insurance if a key employee gets disabled, that the employer can get that money to either pay somebody else to do it, go recruit somebody else to do it. So again, the key person side. We've moved into the guarantee issue side. And guarantee issue is not a product, it's a program. So, from that standpoint, we've had some good luck so far. We've had 3 nice placed cases. Actually, Steve Walker and I are going to talk about one on the 22nd, a case that kind of started out as fully underwritten in inquiry and moved to the guarantee issue, moved to 6 lives on the guarantee issue side. So we've had that as well. Again, so just different ideas of ways to get in front of clients and actually obtain more clients. I think the one thing, the support of E4 and the dedication to this space, we hired a case support specialist here about a month ago maybe now. And Aaron is going to be working on the administration and ongoing servicing of not only our GSI disability side, but our GI life game, our platform, so that we can really provide the service to not only our advisors, but more so their clients, because this is treated like an employee benefit, and they need that service and administration standpoint. That 100 person main contact. So we're building out that side, which is really exciting.
Good stuff, Brady. We do have a question from the audience, so I'll read that for us. For someone retiring before standard age, 65 retirement date, if wanting to keep the policy but no longer have earned income, should they cancel the policy upon anticipated retirement date? Or is there a rider of some sort to extend that policy to age 65 without earned income?
If you are totally disabled, I say that question a lot. So you know, I'll step back and you've got it where, you have some 40-year-old entrepreneur who, spent the last 8 years building their business. They sold it and, they need to take a couple of years off. Okay. Question is are they ever going to come back to the work world? That's the other piece. Are they ever going to come back? Do they need the coverage, from that standpoint? So I've seen people keep it. Now, once you're no longer working, it essentially becomes a total disability only. And if you're not working, it's the of that occupation, which would be as of a retired person. So again, it's probably similar to a Social Security definition, but yes, you can keep it and potentially collect on it. Now, again, it doesn't have all the bells and whistles and, you know, in the plan, but if you're totally disabled and even if you have a catastrophic rider on there, that could potentially pay as well.
So I think it's the point that you said, did they plan to, re-enter the workforce? If they don't, they probably have the assets where they don't need it. Could they keep it? Yes, but the likelihood of a, total disability, less than
Correct.
getting sick or hurt.
It's cost benefit. Is it worth keeping or not? I mean, I even have individuals who are past the maturity age in the policy, which sometimes that's age 65 or age 67, just depends upon the contract. Where if they're still working at 65 and it's an age 65 benefit duration, is it beneficial to keep it? Again, we can make that analysis as well. It becomes total only, what's their health like? I mean, there's a lot of things that you go in there to say, does it make sense? I mean, if you have, retired and you have a health condition that might cause something, definitely. I mean, again, I think each individual situation, you have to take a look at it. Not only do they need it financially, but is there a potential to collect on it because they might have something pre-existing?
Well, clearly you can see Brady has a passion for disability income in all of its various iterations. If anybody else has a question, feel free to put that in the chat box or unmute yourself and just go ahead and ask Brady yourself. While we wait for any final questions, I'd like to remind you that today's brew and our full library of recorded brews is shared on our brew blog on our website at www.e4.insurance.
Hey, Brendon, I do want to say one more hit, and that's kind of the off the wall things. Again, we've had some pretty off the wall cases come our way this last year with opportunities that I think might have been turned away. I mean, for instance, athletes. I mean, we've written 2 professional hockey players. We've quoted some professional football players. We're looking at covering supplemental executive retirement plans on the disability side and that liability. We look at high limit, so above and beyond guarantee issue. I mean, what if you have executives who make $1 million or $2 million a year? How can we get more coverage? Because I mean, the traditional carriers limit them. So, there's health conditions that can't get traditional coverage. But we do have 4 different outlets that we work with. They're all Lloyd's of London cover holders. For just depends upon the situation. So I always say it never hurts to ask. If somebody is insurable or not. There's a potential solution. It's just a function of again need and in budget, and do they view that as value?
All right. Well, Brady, thanks for sharing some of the unique stuff as well. For our giveaway, I'd like you to pick a number between 1 and 27.
Well, I think, we're going to go with 27.
All right. Dave Ellis is our winner. David, congratulations. Thank you for being on the brew, and you have won a Starbucks gift card and a CE voucher. On next week's brew, we will continue with our Disability Awareness Month by bringing on Jim Cooney, Regional Sales Manager at Illinois Mutual. Income protection is not just for doctors and lawyers. Hands-on work is demanding for your farmer, your rancher, prospects, and clients, but many have never considered what might happen if they become sick or hurt and unable to work, much less their farm spouses. What about general operating expenses? Who is going to cover those? What about the manual duty occupations such as plumbers, electricians, contractors, dental hygienists, beauticians, etc.? These occupations are tough to insure for many carriers, but not for Illinois Mutual. Jim is going to fill us in on the competitive solutions and programs that Illinois Mutual has. So tune in for that next week. Thank you, everyone. Thanks for attending the brew, and have a great rest of your week, and enjoy May, Disability Awareness Month.
Thanks, everyone.